Common sense ain't that common anymore. Seems common sense is past tense, just like the dinosaur. Political correctness has got a lot to answer for, 'cause common sense ain't that common anymore.
Now on weekends, the Treasury of Common Sense.
Yeah, we love this segment. We're very fortunate to have the great Leith Van Onselen from macrobusiness.com.au and the chief economist at the MB Fund and MB Super on the line. He joins Luke every week for his Treasury of Common Sense. I'm pleased to say Leith is on the line. Leith, hello. Thank you for joining us. Housing's become unaffordable for most, but you say, and I'm glad I'm sitting down, it's about to get worse.
Yeah, unfortunately, Trent, that's the case. So the latest housing affordability data, which came out from Cotality earlier this year, basically showed that whether you're looking to purchase a home or rent a home, affordability was tracking at record lows. And just this week, REA Group, which is another housing outfit, they released their latest rental affordability report, and that showed that affordability hit a record low at the end of 2025. So they got December quarter data. And that follows a 55% increase in the median asking rent since the beginning of 2020, so basically since the start of the pandemic. And REA Group, they estimate that the national weekly median advertised rent has increased by $230 since the start of 2020. And what that's done, Trent, it's basically added $12,000 to the annual cost of renting the median home. That's the cost across Australia. Now, the situation's even worse in Sydney. So the annual cost of renting the typical Sydney home since the start of the pandemic has increased by $13,500. And in Brisbane, it's increased by $14,000 since the start of 2020. Now, unfortunately, the picture, if you're a renter, is likely to get even worse because last week, the Australian Bureau of Statistics released net overseas migration data for the September quarter of last year. And I talked about this, I think, last week with Luke. But what it showed is that 311,000 net migrants landed over the year to September last year. Now, that was actually up on the June quarter of last year. So migration is re-accelerating and still remains at these historically high levels. And unfortunately, Treasurer Jim Chalmers last week confirmed that net overseas migration is going to be higher than was forecast in last year's budget. So in last year's budget, they forecast that net overseas migration would be 260,000 this current financial year. But now Treasurer Chalmers believes it's going to be over 300,000. And so higher migration is obviously going to put more strain on the rental market, especially given that we've got a supply-constricted market. It's going to get worse with this energy crisis that we've got. It's going to basically push up building costs, etc. And already we've seen Cotality's advertised rental series. So they've got basically a monthly series that tracks rents. That has been re-accelerating, and it actually grew by 5.5% in the year to February. So it's still growing faster than wage growth. And why this is a problem is that the federal government's own National Housing Supply and Affordability Council, so that's the government's own advisor on this stuff, they forecast in May last year that Australia would have a cumulative increase in the housing shortage of 79,000 over the 5 years to 2028-29. But that was based off Treasury's old migration forecasts. Now, as I said, Treasurer Jim Chalmers thinks it's going to be higher. It's going to go from 260,000 this financial year to over 300,000. And the National Housing Supply and Affordability Council, they actually, in their sensitivity analysis at the back of their report, they said that if the population grows 15% faster than forecast, which seems likely now, that instead of having a 79,000 shortage over the 5 years to 2028-29, it would instead be 200,000 over 5 years. Now, this is just obviously an absolute shocker if you're a renter, but it's arguably even worse if you want to purchase a home because, as we know, the Reserve Bank of Australia has already increased interest rates twice, and the financial markets are now expecting 3 more rate hikes this year. So that means if these rate hikes all come to fruition that the financial markets are forecasting, it means that we would have seen the cash rate and ergo mortgage rates rise by another 1.25% this year, and the cash rate would then be at an 18-year high of 4.85%. And that means that mortgage rates, the typical discount mortgage rate would have risen from 5.5% before February, before the first rate hike, to 6.75% by the end of the year. Now, what that means is that if you're somebody who's carrying the average new mortgage, which is $736,000, that means that if we get these 5 rate hikes, your monthly mortgage cost will have risen by nearly $600. which is over $7,000 a year. And the people I'm particularly worried about, Trent, are recent first home buyers.
Yeah, of course.
Because the Albanese government brought in they expanded their 5% deposit scheme in the 1st of October last year. And that has basically pulled thousands of first home buyers into the market, putting down only 5% deposit, borrowing 95% of their loans. They've borrowed aggressively to get into the housing market. And according to the Australian Bureau of Statistics, the average first home buyer mortgage in the December quarter of last year, which is the latest data we've got, was $607,500. Well, if you borrowed that amount, you're looking at an increase in your monthly mortgage cost of nearly $500 if all these rate rises come into effect. So this is an absolutely disastrous situation. The federal government has, in my view, they've sucked first home buyers into the market at the very worst time because they brought this policy in 1st of October last year. A lot of people would have stretched themselves to buy and then not expecting the Reserve Bank to then raise rates twice already. And according to the financial markets, we're looking at another 3 more rate hikes. And these people are facing severe mortgage stress, as well as potential negative equity if, say, Sydney home prices fall significantly. They could be underwater in their mortgages. And I guess my point here, Trent, is that whether you're looking to rent because of the high migration or you're looking to buy, housing affordability is going to get more unaffordable in 2026.
Leith, I'm staggered listening to you talking about the net immigration numbers, especially given everything that's going on. And I've now been inundated with text messages saying, why haven't they locked the gate? Why are we still issuing permanent visas? Why are so many people coming in? Ian asking, that was from Lynn, Ian asking, who's in control of immigration if the government gets its own predictions wrong?
Yeah, absolutely. I mean, the fact of the matter is we found this out during the pandemic. The government can slow the rate of migration whenever it wants. It controls who it lets in and the circumstances in which they come in, and it obviously approves the visas and that sort of thing. And I just don't understand why in a very supply-restricted market whereby we can't build enough homes, and it's getting even more difficult to build homes because now we've got high interest rates and they're going to go higher, which makes it harder for developers to make projects feasible. It also makes it harder for buyers to afford to buy new dwellings because they're more expensive. We've got soaring building and materials costs, and that's just going to get worse. Like Reece, the plumbing company, has just put up its costs by 30% because of the high fuel costs. Well, that's just one example. We're going to see that across the entire construction market. So the cost of building homes is only going to go up, and when the cost goes up, it means you get less of it. So why is the government importing historically high numbers of people into a supply-constrained market when we already have the worst rental crisis in the nation's history?
Yeah.
And, housing is becoming even less affordable. And the thing is, Trent, we actually have the complete polar opposite happening in Canada. So Canada had a massive migration explosion after the pandemic. But unlike here, and they also had a massive surge in rents and an acute rental crisis, the difference is their government has frozen immigration over there. And in the year to September, in last calendar year, the year to December 2025, Canada's population actually fell by 100,000 because they cut immigration. And guess what? Canada's rents have fallen for 17 consecutive months.
Yeah.
Canada's rents are 8% below where they were at the 2024 peak. They're tracking at a 33-month low. And Canadian house prices are also declining. So Canada has sort of shown that if you simply pull the immigration lever and significantly reduce it, you will improve the rental market and you also put downward pressure on prices. But our government is not listening, and they continue to run immigration full tilt into a housing crisis when we've got also an energy crisis, a construction cost crisis, and we just simply cannot build enough homes because they're too expensive and interest rates are high. It's a crazy situation.
Just doesn't make any sense, Leith. Thankfully, you do when you break it down. But as you said, government's not listening. Mate, thank you so much for your time today. You'll talk to Luke again next week.
Yeah, thanks, Trent.
There he is. That's Leith Van Onselen, Chief Economist at the MB Fund and MB Super. He joins Luke every week for his Treasury of Common Sense. Seriously, you listen to what Leith has got to say there, and I listen to him when he speaks to Luke every week. I know you do. And it just is what I would understand to be common sense. If we have more people who need houses than we have houses to supply them with, we have an issue. It's that simple. But this is a government that's spending more money than it's making, and then tells economists that warn them about that they're idiots who don't know what they're talking about effectively, and ignores them. And I think Leith made a really good point there. The government's just not listening. Elizabeth says this government's driving Australia to another Argentina. They know it as well. God help us all. Peter saying that the cost of everything is going up. Concrete, as you said, as Leith said there, PVC piping, plastics. I mean, this is the other thing that the government doesn't seem to want to understand, is that petroleum products go into all sorts of things, not just petrol as well. All sorts of other things as well. Bruce saying we should keep the immigration number down to a more manageable level. Can't argue with that. Peter says, unfortunately, real estate agents are going to win both ways. Well, that's true too. And the other message I've got here doesn't have a name on it, but says the Big Australia policy. That's the one thing that matters. Completely unacceptable. Jeff says, have a look at the disclosure documents about how many of the Labor Party frontbench have investment properties, multiple investment properties too, mate, as well. It's an issue. And as Leith said, the biggest problem for me is the government is simply not listening to experts who know more about the subject matter than they do.